SPY is one of the indexes in the market that helps you understand where the overall market direction is headed. If SPY is going upwards, typically most things are also going upwards as well, most other stocks. And if SPY is going downwards, the same applies. Most stocks are going downwards. So taking a look at SPY and understanding the overall direction and where we're headed next is super important. In today's video, I'm going to give you my opinion on where I think the SPY price is headed next and when we're actually going to see our first correction. From our COVID lows back in March of 2020, SPY has nearly doubled. So how much further are we actually going to go up before we pull back? And how much are we going to pull back? And what's the best way for you to take action on that? If you're interested in any of these answers, I'll be going over all of that and more in today's video. The last time we took a look at SPY, it was about a month ago. SPY was sitting at these prices around $423 or so, and I was predicting a downside movement relatively soon on SPY. I was targeting price targets around 406 or so, maybe down to 400, over the next couple of weeks inside of June there. And I told you that once this pullback actually did end up happening, I was targeting upwards again for new all-time highs at $436 or maybe even a bit higher, but I was waiting to put an actual prediction on that until we saw that downwards turn in the market. Now all of this prediction that I'm making is using something called Elliott Wave Theory, and I'll give you a little bit more information about that, as well as these Fibonacci Extensions and Fibonacci Retracements that you'll see on my charts. So let me go ahead and dive into the real-time chart right now. Now where I have this chart scrolled to should look pretty similar because this is exactly where we were looking at in my previous video, as I was just showing you. That video was on June 13th, so SPY prices were inside of here, and that's where I was expecting the downturn. Again, I was predicting downwards to about $406 to $400. Now, only about 2 days after that video, SPY did end up peaking. We went a few dollars higher, closer to 426, and then we had that pullback that I was expecting, down for this Y wave right here, and I'll give you more information on that in just a second, down to about $413. So not as deep as I was originally projecting, but we did end up going a little bit higher as well, which is part of the reason we didn't go as deep. So before I continue onwards, I want to give you quick introductions into Elliott Wave Theory. Now, it's worth noting that Elliott Wave Theory is a pretty complex theory, and I actually have a 10-part playlist on Elliott Wave Theory, so if you don't know anything about it, I obviously can't cover all of that right now. And if you want to learn it in depth, which I would highly recommend because in my opinion, it's the best way to predict long-term movement in the market, you can go ahead and watch that playlist. For now, I'm going to give you a 30-second introduction so you can understand where I'm coming from with my prediction. Elliott Wave Theory basically states that the market trends in waves of fives. It looks something like this, with this 5-wave movement headed upwards, 1, 2, 3, 4, 5. Of course, not all of these 5 are in the upwards directions. We have the 2 and the 4 that are actually retracing part of the moves or heading back downwards. And then once this 5-wave structure is completed, we get an ABC afterwards that looks something like this. A, B, C, and this is trending in the complete other direction. So this 5-wave move is putting in upwards movement, and the ABC is putting in downwards movement. And this pattern basically just repeats itself over and over on larger and larger scales to the point where basically this 8-wave structure is just this 1, 2 on a larger degree, or a more zoomed out time frame. So all of this 1, 2, 3, 4, 5, 6, 7, 8 structure is just yet another 1, 2, and then we'll go ahead and form the 3, 4, 5 once again afterwards. Now there are a ton of different rules and guidelines as to which 5-wave structures and what 3-wave structures actually are allowed and how they play together and how they repeat. But again, I can't go over all of that. That's a pretty brief introduction for now. So if we just zoom out on SPY, all the way from those COVID lows, which is where I believe we're starting a new 5-wave structure. So we're looking for this yellow 1, 2, 3, 4, 5 to finish in. And then afterwards, we would have that ABC as I was talking about. Now, I believe that the 1, 2, 3, and 4 of the yellow 5 are already in, and we're working on finishing up that 5-wave right now. Now, inside of that yellow 5-wave, as I was saying, there are waves inside of waves. We have yet another 5-wave structure. So if we go ahead and dive into this yellow 5-wave structure right here, you can see I have yet another blue 1, 2, 3, and I believe the 4 is now in, which is a change from the previous video. We were looking for that final push downwards to put that 4 in, and now we need to finish that blue 5-wave structure, which would finish the yellow 5-wave structure at the same spot. Now, I won't cover my whole count up to this point. If you want to see how I've gotten to where I am now, go ahead and watch the previous predictions on SPY. For now, I'm going to move forward from where my last video left off, when we had this WX into here, and we were working on that Y. Now, I didn't tell you about the WXYs. Those are basically just another form of that ABC sort of correction. However, it's actually two of these ABCs. So you see this one right here, ABC, connected with yet another ABC inside of this Y, and then an ABC for the X in the middle. So instead of just one ABC downwards for that fourth wave, it's actually three ABCs that are all connected. ABC, ABC, and then another ABC. Now, if you really dive into this Y wave right here, you can definitely make out an ABC inside of it. I basically see it like this, where we have 1, 2, 3, 4, 5, and this 5-wave structure makes up the A wave of our ABC, and then we have a B up here, and the C is the final push downwards. So A, B, C to finish off this Y wave, which is all part of this red WXY, which finishes our blue 4 into here. I know that gets a bit complicated. Basically, this red WXY is our entire correction after our blue third wave. So our blue fourth wave is entirely made up of this red WXY, and with that in, it means that we're headed upwards to finish this yellow 5 with finishing the blue 5 as well. So now, all that we need inside of this final structure is another 5-wave structure to finish up the blue wave on an even smaller degree. So we need to zoom in just a little bit more into where we are right now, and we need to figure out when this blue wave is going to finish. Now, one of the ways I'm actually going to anchor the 5 waves inside of this blue wave is based off of our previous price action into here. Now, when price dove on July 6th here from about $434 on SPY down to about $430, so a 4-point move in this 1-day span into here, and not even a day, just a couple hours into here, as an Elliotician, this is where one of those powerful things starts to come in, because one strong move downwards cannot be an entire correction. As I was saying, corrections are made up of that ABC, or in a rare case, this WXY as we had previously. So when you see the sharp move downwards, it means that it has to be an A wave downwards. It's a really good sign that the market's going to push downwards once again before our overall trend can continue upwards. And that's exactly what we see right here. We get this B wave into here, and then a C wave that shoves downwards once again below that A wave. And this structure is known as an expanded flat because the B comes above the start of the A into here. Now I'm going so deep into this small structure right here because I think this helps us anchor where our count actually is into here. These expanded flat structures can only come in either the 2-wave or the 4-wave inside of the 5-wave structure that needs to make up this blue 5-wave right here. So we're looking for a 1, 2, 3, 4, 5 to finish this dark blue structure. And I obviously didn't put this 1, 2, 3, 4, 5 in the right places right now. That's what we're currently trying to figure out. Now, the most common spot to see an expanded flat is actually in the 4th wave of the overall move. So it would look something like this, where our 3rd wave is the top up here, and then the 4th wave is this expanded flat, and now we're in the final push upwards to finish that 5th wave. That would mean that our 1 wave and our 2 wave basically have to come somewhere before this 3rd wave. We'll look for basically the spot with the highest retracement. Now you can see right near the start of our movement, we get this push upwards into 417 or so, and then we immediately fall back down into 413. However, if you actually look at this, this is basically just a flash wick downwards, and it happens in after hours. With something like this, I'm not going to count our 1-2 as this small amount of price movement right here, 1-2, even though it's technically valid and you could. I'm going to lean more towards looking for something higher up, because something that's only a couple hours for a 1-2 versus a multi-day 3rd wave to come after it just doesn't really make too much sense. You want the time of the waves to be relatively similar. There's no hard rules of what they are, but you don't really want a couple hours for a 1-2 and then a couple weeks for a 3rd wave. That just doesn't really make too much sense. So one thing I'm actually going to do is turn off the extended hours data just to get a look at what it actually looks like. And I think once you do that, this 1-2 becomes a little bit more clear. I think we have a pretty strong push upwards into this area right here, around 424, and then we get our first kind of retracement into here, back down to 422 or so. So let's turn the extended hours back on and see what it looks like with that on. And I think that still makes a lot of sense. We're kind of just heading pretty strong upwards to this one wave into here. We get this little pullback into here, but I think once again, this looks like an ABC, just like our fourth wave does. So this is probably the fourth wave of this one wave, and I'll leave that out so it doesn't get too complex, but you know that there's got to be 5 waves inside of this one wave right here. So maybe that's the fourth wave of this one wave, and this is our 1, 2, 3, 4, and we're working on the 5. Now in Elliott Wave Theory, this is actually extremely shallow for a 2-wave. With our Fibonacci Retracement tool, we tend to look for a 2-wave retracement between the 50% and 61.8%. I'll show you what that might look like. If we have price action that looks something like this, we're moving upwards like this, and then we start to come back downwards like this, we can use our Fibonacci Retracement tool and click at the start of our movement down here and the top of our movement up here, and then just drag this sideways. We'd expect that 2-wave, as I was saying, to fall between this red line right here, which is labeled 0.5, also known as the 50% retracement, and this 0.65, this yellow line, or a 65% retracement. Basically what these numbers mean is that, for example, this red line is a 50% pullback of this entire move. So it's the halfway point between our low that we clicked and our high up here. Now, of course, we can just visually see that this 2-wave isn't going to be deep enough. It's not obviously a halfway pullback of this entire move up from the bottom to the top of our 1-wave, but I don't see anything throughout any of this price action that would be a 50% pullback. So if we're using this as our bottom right here, even if we use our first pivot into here, you can see we don't even come to that blue 38.2%. Go up to the next pivot, same thing. Continue to check all of the pivots, which would help give us a good idea of where that 2-wave actually is, but none of them are quite there. Our 2-wave is just going to have to be shallow, and even though it's rare, it's pretty much the only choice to here. So in hindsight, this 1-2 would have been hard to trade and predict, but now that we have all of this price action after it, I don't think it matters too much where we place that 1-2. The only thing we need to verify is that the third wave is longer than the 1-wave, and for that we're going to use our trend-based fib extension tool. So for this, I'm going to click at the bottom and the top of our 1-wave, so right here and up here, and this is going to capture the length of our 1-wave. Now, wherever we click after this, it's going to measure it relative to the length of our 1-wave. So let's click at the bottom of our proposed 2, and I'm going to drag this sideways just so we can see it show up on the chart, but you can see I'm lining it up with the bottom of the 2. And now what this extension basically means is that at this pink line right here, which is labeled 1 or 100%, the 1 and the 3 would be equal in length. Now in Elliott Wave Theory, the third wave cannot be the shortest wave, so it has to be longer than either the 1 or the 5, and typically it's longer than both of them. Now because the 3 comes above this pink line, it means that the 3 is more than 100% the length of the 1-wave, or the 3 is longer than the 1-wave. So this is valid so far and we can move forward. The next thing we'll do is put a Fibonacci retracement from the bottom to the top of our third wave into here. Now with the fourth wave retracement, we typically look for it to come between this blue 38.2% and this red 50% retracement. So let's see what ours looks like. Click at the bottom of our 2 and the top of our 3 into here. Notice how I'm not clicking at the top of this B wave into here because this A, B, C is all part of the 4. We're just clicking at the top of our third wave right here, and we'll pull it sideways. And like I said, the fourth wave is most common between this blue and red lines. However, it's not too crazy for it to come just below the red line here, in between this zone right here. And especially when our 2-wave is so shallow, the 2 and the 4 tend to pretty much differ entirely. So with such a shallow 2-wave, it's not surprising that our 4 is a bit deeper than we'd normally expected. This looks good, and we'll continue forward once again. Now for our 5th wave, which is the most important one, because wherever this peaks, it's going to peak our larger blue 5th wave, as well as our larger yellow 5th wave. And this is going to be an overall peak in the market, as I'll show you shortly. So there are a couple different ways we can predict out where this blue 5th wave is going to be. I'll start off by looking at our light blue structure. We're basically going to put a whole bunch of different tools and Fibonacci retracements and parallel channels onto our chart to find zones of confluence, basically zones where all of these come together in agreement. So the first thing we're going to do here is use another trend-based fib extension tool, and oftentimes the length of the 1 and the length of the 5 are equal in value, and if they're not equal, they come to one of those other Fibonacci retracements in a trend-based fib extension tool. So we'll click at the bottom and the top of our 1 wave into here, and then at the bottom of our 4th wave, and we'll pull this sideways. And like I said, that 1 to 1 is the most common zone. So let's go ahead and throw a small box into that zone right there to go and capture that right now so that we could take the tool off. So let's delete that trend-based fib extension tool. We've got a start to work with now. The next thing I'm going to do is put that Fibonacci retracement back on from the bottom to the top of our 3rd wave and pull it sideways. And oftentimes I look for this negative 0.236 or this negative 0.618 as targets for my Fibonacci retracement. Now these negative values are basically the same thing as the positive values, but just flipped on the other side. So whereas the 0.5 downwards is a 50% retracement downwards, if we had a negative 0.5, it would just be that same distance, that 50% retracement, but extended upwards instead. So this negative 0.236 and this 0.618 are two of the key targets I look for. So I'm going to put 2 more small boxes on top of those, just like this. Now, as I'm looking at this, even though it doesn't fit with Elliott Wave Theory, I'm also going to pull this Fibonacci retracement up to the top of our B wave into here. Because oftentimes, we want to check multiple pivots with these retracements for the possible targets to the upside. So if I just put that retracement onto our chart, and you can see that the retracement nearly touches our golden zone into here, our 0.618 retracement. So I do like the look of this Fibonacci retracement, especially with the A wave end up falling right at this 0.382 into here, and we hover kind of right into this hot zone into here. So again, we'll use this kind of area as 2 more potential targets. Now because this green line basically falls in between the 2 boxes right now, I'm actually just going to expand one of my boxes to cover this whole zone into here. That way we can have all of this confluence inside of the same box, and I'll do the same up here. So let's expand this box to catch that blue line, and then we'll expand this bottom one to catch basically all this into here, and we'll delete the bottom box into there and delete this Fibonacci retracement off of our chart. So now we've kind of got 2 possible zones for SPY to peek inside of. The other thing we'll want to do is use parallel channels. For parallel channels, we want to click at the bottom of our 2 and the bottom of our 4, just like this, and put it at the top of our 3rd wave into here. And let's take a look at how this parallel channel has done so far, just to make sure it is valid. Because basically, if it's had no significance in the past, why would we expect it to have any significance in the future? Now, if we look at the median line into here, you can see it was perfect rejection up in here. The first time we got around 428.5 and then pulled back, rejected again through this area, and we struggled to break through. But when we finally did, that's when we got up to put in our 3rd wave, pulled back and rejected perfectly, pulled back and supported perfectly at our midline into here, and so on. So we can see this parallel channel is definitely significant, and we're actually coming up near the top of it right now. So I'm going to change these boxes to actually line up with the top of the parallel channel into here, because again, that's just going to give us more confluence into here. So somewhere inside of this time zone looks like it would make sense, potentially all the way out into here, so that we're using the top of the parallel channel up all the way through here. Now this top box doesn't really make too much sense with our parallel channel. It would have to be much, much further out, and by how far up we already are, this would basically have to go sideways for a pretty long time for a parallel channel and this top box to line up together. So we'll just pull this out to line up with the other one just to keep our chart clean. And now let's delete this parallel channel off. So these are all the sorts of things we want to do to predict where this 5th wave is actually going to come in. So far, this bottom box is definitely a stronger area, but if we end up blowing through it, getting to this top zone seems reasonable too. So now, since we've done this for the light blue structure into here, let's actually zoom out and do some of the same things a bit quicker with the dark blue structure as well. So once again, trend-based fib extension tool, measure the length of our dark blue 1 into here, and then put it at the bottom of our dark blue 4, and you can see this 1.0, like we were using before, is almost perfectly at this box right now. Let's just expand it slightly upwards to include that as well. We'll use the same Fibonacci retracement from the bottom to the top of our 3rd wave into here. And for this one, that negative 0.236 is kind of already hit a long time ago into here. We're getting relatively close to the 0.618, but we're pretty far away. We can maybe expand this top box to include that zone as well by pulling it up $1 or so. So now we get a little bit of extra confluence up there. And then lastly, let's try a parallel channel, just like before. So we'll click at the bottom of our 2, the bottom of our 4, the top of our third wave into here. And you can see the median line once again, significant all throughout all this price action. We're pretty far from the top of the parallel channel, so I'm not going to include anything with that just now. We'll leave that one off. And now, just to do the same thing once again, Fibonacci retracement of our yellow 1 wave at the bottom of our yellow 4 into here. And the 1.0 is pretty far away, but we are really close to this gold 0.618, and it actually falls inside of this first green box into here. I know with it zoomed out, that's a bit tough to tell, but you can see this gold 0.618 line goes right through our bottom box of confluence. So if we don't make it to that 1.0, that 0.618 is another common spot for the ratio of the 1 to the 4. So again, another key point of confluence into this bottom box into here. Next up, once again, that Fibonacci retracement, bottom to the top of our third wave. This doesn't give us too much. This negative 0.236, again, we've already gone way through, and the negative 0.618 is another 25 points upwards on SPY. We can't really even include that in anything. We'll just remove that. And we'll throw one more parallel channel, bottom of our 2 to our 4, to the top of our third wave into here. And now let's zoom in and see how that parallel channel actually looks, because it's hard to tell zoomed out. And you can see it lines up perfectly once again over this next week or so into here, top of the parallel channel, right inside of this box as we already have it. So we've built a ton of confluence that SPY might end up peaking somewhere around 436.5 up to about 440 on SPY into here. And if we do end up pushing up to that, then a range between 441 and 444 looks like a good secondary target. So overall, that's my prediction on SPY in the short term. I think we're actually very, very close to peaking in here sometime in the next week or two inside of this current range that we're looking at from about 437 upwards to about 444. Now, one thing to note is that when this does happen, we're going to get a major correction on SPY. All of this yellow 1, 2, 3, 4, 5 that we have into here is just another 1 wave on a larger degree. So we have yet another 1 with all this price action, and we'd get that same 2 wave to come afterwards for a 3, 4, 5 following later on. Let's go ahead and change this to a larger number structure and change the color so it's much easier to distinguish here. I'll go with this pink color, and that's basically what it would look like. All of this are 1, and we're going to get this 2 pullback afterwards. Now, as I've told you, the most common spot for that 2 pullback, and we'll just assume we peak somewhere in the middle of these 2 boxes, around 439, 440 for now, is down between this red 0.5 and this golden zone into here. Now, of course, we've seen some shallow 2s into SPY up here, so it wouldn't be crazy to have another shallow 2 wave come just to this 0.382, but predicting any more shallow than that is extremely rare, and we wouldn't go as so far to do that. So overall, I think once SPY peaks, we're going to see prices at the minimum of around $350, but it could be all the way down to the 0.65, and we could see SPY prices touch 300 or just under 300 again, down to about $296, something like this. Now, of course, this move has been from March 2020 up to about July of 2021. So it's been about 16 months. So I wouldn't expect this correction that we're going to have to be a 1 or 2 month sort of thing. I'd be looking at a correction more along the lines of at least 6 to 12 months in length, somewhere comparable to the length of our 1 wave in time. Now, of course, if we do fall quickly, that does end up making up for time. But for the most part, I'm going to be predicting a 6 to 12 month bear market with prices anywhere down to about $350 on SPY to potentially just under $300. Now, once this does happen, I will of course be updating you as I go, but the future of SPY will of course once again be having all-time highs much higher than we are right now. Now, if you made it this far, I have just a couple more words for you. One, if you liked this video and want to see more similar content, please do me a huge favor and click that like and subscribe buttons. This helps me out a ton, it helps YouTube figure out what kind of content you like, and I really appreciate all of your support. And two, if you want to trade with me and others and get my opinions on things like this in real time, ask me questions, and just chat with me every single day, I have a link to my free Discord in the description below. It will be free forever, so feel free to come join and hang out and chat with me and others. So with all that being said, thank you so much for watching, and as always, good luck trading.